We have all heard the saying, it takes money to make money, and although this is true, many still don't really understand exactly what this means or how it works in practice. But the truth is that once you're able to unlock the mindset of having your dollars make more dollars, and then having those dollars, those new ones, make even more dollars, you are quickly going to find your way to financial freedom. But in this video, we are going to go through some of the basics, yet some complex concepts and strategies involving dividend growth investing. And within that, some of the most important things to understand. Then later on in the video, I'm going to share with you some specific investment vehicles, which I think could be perfect for investors looking to become rich and potentially even retire early. Now, if this interests you at all, make sure to please stick around until the end, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, when it comes to building out a long-term dividend growth portfolio, one of the most important things to understand and one of the most important key concepts to pay attention to is the power of compound interest and how you can get your portfolio to compound quickly. And in a quick second, I'm going to share with you my actual dividend growth portfolio, which you can see right here on the screen, and show you exactly how the power of compounding has helped me grow this portfolio to a point to where now I earn north of $6,000 per month every single month of the year. Now, right over here on Investopedia, let's talk about the power of compound interest. It says some key takeaways. Compounding multiplies savings or debt at an accelerated rate. Compound interest is interest calculated on both the initial principal and all previously accumulated interest. Now, generating interest on interest, and this is sort of what I talked about earlier, generating money from those new dollars, and then once those dollars are money, generating more money from those, is known as the power of compound interest. Now, a few key things to understand when it comes to the power of compound interest. You're going to be able to build out a larger portfolio as long as you give the portfolio enough time to grow, and on top of that, reinvest all the dividends along the way. Take this portfolio for an example with a $10,000 starting principal and $12,000 of annual contribution into this portfolio. An initial dividend yield of around 5%, an expected annual dividend amount increase of around 3%, and an expected annual share price appreciation of 5%. 30 years invested with the distribution frequency quarterly and then drip turned on, all the dividends being reinvested. This $10,000 portfolio year one, of course, is going to be worth $10,000. But after it pays around $509 in dividends and after the annual contribution, this portfolio year two is already worth $23,000. Now, skipping ahead, you can see the power of compounding take place as all those dividends are reinvested and as the portfolio continues to have more money added to it. All along time, the principal is getting larger and larger because the asset you bought into is growing. The portfolio that started off at $10,000 20 years in is now worth $570,000 plus, earning north of $20,000 per year in dividends. Not to mention 30 years in, this portfolio that started with $10,000 and a $12,000 contribution every single year, which is just $1,000 per month. This portfolio after 30 years is worth $1.4 million with almost $40,000 paid per year in dividends. Now, of course, like I mentioned, the most important things to really juice up the power of compounding is to give the portfolio more and more time to grow and to let the power of compounding do its thing. And on top of that, the more you can add into the portfolio as soon as possible and let those dollars start to compound on top of themselves, that's going to grow the portfolio at a faster and faster rate. Now, for a real life example, this right here is my 7-figure dividend portfolio, and this is basically every single share of every single stock or ETF I currently own across multiple portfolios. And side note, you can grab yourself this exact same dividend tracker if you want to track your dividend progress. It's the first link in my description. But as this portfolio sits currently, like I mentioned, it's currently bringing in roughly $75,000 per year in dividends, or around $6,200 per month. And that's because over the years, over several years, this did not happen overnight. But I bought into dividend paying stocks and ETFs, different things like shares of Apple, companies like Verizon, or ETFs like QYLD or even JEPI. For years now, I've been buying into these different dividend paying ETFs and stocks, but maybe the most important part, the thing I decided to do while buying these different stocks and ETFs over the past several years, is that I decided to take every single dollar, more or less, that I was paid in dividend income over the past several years and reinvest every dollar into more different dividend stocks and ETFs. So just to be clear, for an example, Realty Income, ticker symbol O, which I currently have around 2,848 shares of that I've been buying for around 5 or 6 years now, Realty Income now pays me around $700 every single month in dividends. And of course, I could take that $700 and go buy something nice, go have some fun. But instead, what I do every single month is I buy more shares of Realty Income from the money that Realty Income paid me. So to recap, I buy shares of Realty Income, they pay me dividends, and then with the dividend income, I buy more shares of Realty Income. And then guess what? Next month after that, Realty Income is going to pay me even more. And then I can, of course, buy more shares of Realty Income. And like I showed you, as long as you do this over a significant time frame and add as much money as you can into the portfolio into high quality different stocks or ETFs, the portfolio will start to have a life of its own and the power of compounding will take off until the portfolio reaches the point to where you're financially free. So if you are still watching at this point in the video, make sure to drop a like down below if you're enjoying what you're seeing. But I did promise that I was going to give some examples, some real life examples of some of my favorite different stocks and or ETFs that have the power of compounding sort of built into them. Now take SCHD for example, one of my favorite long-term buy and hold ETFs. This ETF in my opinion has sort of the power of compounding baked in, because if you look at SCHD's dividend history, you can see that SCHD has consistently paid more and more in dividends year over year since around 2011. Now what this is going to mean for you is going to be magical. As you buy more shares of SCHD for example, and this is only going off of what SCHD has done historically, and even though we can't base the future off the history, we can at least use it as a template. But as SCHD continues to pay more and more year after year, and a long time, if you keep on buying SCHD and reinvest their dividends along the way, you're not only going to have the power of compounding from reinvesting the dividends, but also the actual asset's going to pay you more and more, or at least has historically. But the cool thing is it's not just SCHD. Of course, throughout the market, there's plenty of different dividend-paying stocks and ETFs that also have had some significant dividend growth historically. Take the VOO ETF or the Vanguard S&P 500. This is, of course, a very common, popular ETF that most investors have at least a share or two in their portfolio. But you can see right here, it's the same thing. Over the past 10 or so years, this ETF is now paying over double per share per quarter in dividends, which is going to significantly compound the portfolio if you are, for example, building a portfolio with tons of shares of VOO, just to go off of the strategy that we were talking about earlier. So especially if you would consider yourself somewhat of a maybe newer dividend growth investor that's looking to build out a portfolio of high quality stocks or ETFs, make sure to please fully understand the idea, the strategy of building a portfolio that you're going to allow to compound over time, year after year, because the power of compound interest is something very, very important. And of course, along with that, like I shared a second ago, stocks or ETFs that have a consistent history of also raising dividends and have consistent dividend growth is also just going to put a little bit more wind to your back and make the process a little bit easier. So all in all, if you're able to build out a long-term dividend growth portfolio with different dividend-paying stocks and ETFs that all have a consistent history of not only paying dividends, but also raising their dividends over time, you also are going to be able to build a portfolio that's going to pay you more and more and more as long as you can stay the course and stick to the strategy at hand. But now I want to hear from you guys down below in the talks of building out a long-term dividend growth portfolio. What's your number one favorite asset, whether it's a stock or ETF? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.